So welcome. My name is Carl Weiss. I'm with Algo Futures. I'm the chief algorithmic architect at Algo Futures. We are the creators of Sceeto. So we have built Sceeto. They're our algorithms. We own and operate it. Sceeto is a brand name, but it's really Algo Futures. If you don't know the skinny, we're order flow guys. We are just order flow guys. Can't say it more explicitly than that. We live, eat, and breathe order flow, primarily off the electronic futures exchanges, but we do monitor some equity order flow where we're not too much into bonds right now, just a little bit into forex on the future side. But in terms of your standard Globex products, that's our meat and potatoes. We spend a lot of time in that order flow, in that data. So that's one area that we're very familiar with. So if you have questions about that type of order flow and how that type of order flow is related to changes in price, this is the kind of conversation that you're probably going to enjoy, kind of like a talking shop conversation that we're going to have today, because that's really that we're going to be going on again. We do have a lot of insights into the market, but today's discussion is primarily on order flow. After we published the announcement for this webinar, and I started going through the curriculum, there's no way we're going to get through MacDaddy in an hour. It's just not going to happen. So then we rejiggered this. So this is called part one. Today is part one, and we'll do our best to get through as much as possible, but we don't want to rush it because there are a lot of wonderful nuances to MacDaddy that once they're obvious to you, they're very consistent. They're very like bread and butter. I've been trading with MacDaddy for I don't know how long. I wrote MacDaddy. It is my go-to bread and butter algo. I look at every bar, the close of every bar in MacDaddy, and every bar in MacDaddy tells a story. And some of the things that I've gleaned from the market and that I trade on a regular basis, I'm going to try to put in a nice little package with a bow on it and then pass it over to you today, and then also continue next Thursday to get everything over. And I think that we'll give you enough information today that you fall off your chair, hopefully. Like that's the kind of goal that we're going for today. Basically, the thinking here is, why does price and order flow go together like peanut butter and jelly? Price and order flow are essentially inseparable. The market is basically changes in price, changes in order flow, and how those two things interplay, how order flow is coming into the book, how order flow transactions waiting in the book, how those get filled, how those get replenished. That interplay of that information with changes in price is the tell. And we use that word here a lot. Like if you're a poker player, you always know that you're looking for the tell on the other guy at the table. And order flow gives you tells all the time. And what's nice is they're very, very consistent. The guts of this presentation I wrote maybe 3 years ago. Nothing's really changed. So the markets are always changing, but this is really bread and butter stuff. And this is stuff that kind of like is going to go away from the momentum indicators and all that stuff, leave it in the dust, and you'll see, that's why price did it. It's very rare that you'll see a move in price and that you can't go to MacDaddy and go, oh, that's why it did that. It's very rare that you don't have that. Basically all the time, you're going to go, oh, what's happening in price? Oh, MacDaddy's doing this, price should do this. Oh, MacDaddy changed or price changed. It will self-correct at all times, and it has to self-correct because order flow is what drives price. So price is a function of supply and demand. And a lot of people, I talk to a lot of traders. I'm trying to talk to more and more even, and everybody's got a different take on the market, particularly how long their duration is, the time frame, the time horizon of their trades. We are traders here, we are not investors. And I see people often make a mismatch there. Like investing is not trading and trading is not investing. So the fundamentals that a lot of people focus on, interest rates or housing starts, is totally irrelevant if you look at what happened here today. The price went up, interest rates were the same. The price went down, housing starts were the same. It's total noise. There may be something that hits the wire. Oh, Janet Yellen says we're in a speculative fever, and then that is going to hit Dow Jones, and the order flow and price is going to respond. But what she said, who cares? It's just some news event hit the wire, and then selling came in. Price is going to respond. That's what we look at. Just in terms of like Echo 101, if everybody took Echo 101, for price to change, there must be a change in either supply or demand. That's it. If you have price of a bagel and it's $1, it's always going to stay that way. If more demand comes in, price is going to go up. More supply comes in the neighborhood, price is going to go down. Doesn't matter. But if there's no change in supply or demand, there's no change in price. Then what's really important to us as traders is that in the electronic markets, changes in supply and demand are manifested by changes in order flow. That's where it comes from. So the momentum change, if you have a momentum indicator, just classic momentum indicator on price, the changes in that momentum indicator are predicated on the changes in price. So that momentum indicator, fast or slow, whatever you've got, is going to be lagging changes in price. The momentum indicator can't update until price updates. That's a phenomenal concept and something that's very important to us as day traders. Conversely, if you're looking at changes in price, price is not going to change until order flow changes. And that's why we're looking at order flow. We're so obsessed with it because that's the tell. That's going to tell you where supply and demand changes. We say order flow is really a leading indicator. And MacDaddy, which we're going to go to today, we've really engineered and designed and calibrated MacDaddy to lean into this law of economics, the law of supply and demand. So David Martin's asking a very interesting question. What's our specific definition of supply and demand or order flow? Order flow is a known state. Let's just stick with one market to keep it simple. We'll talk about Globex, the Globex servers in Chicago, which are owned and operated by the Chicago Mercantile Exchange. And let's look at one particular market, which is the S&P 500 E-mini futures, or a product that has the symbol ES. Let's stick with that, and let's look at what's going on there. You've got an order book. You've got orders coming in. That's order flow coming in. We put everything under the order flow umbrella. So if an order is traveling across the wires and goes down to the transaction matching engine, Globex is actually physically servers that are transaction matching engines. They're going to match buyers and sellers. We're looking at the data components of that, timestamps and coming into the book, and then whether it got filled or not, what it got filled at, how price responds to that transaction, whether it does or does not, what are the replenishments in the book. So everything that's happening that at the transaction level, we call order flow. Now, in terms of supply and demand, there's a couple of nuances because the classic concept of supply is more stuff coming in, and then the classic concept of demand is more requests for stuff. And then that's great at conceptual level on Echo 101, but when you're looking at this transactional data, well, what does supply and demand mean? And that's where David's going, I think. So, David, we're going to be breaking that down a little bit, but let's just start. So buying would be essentially demand, and I say essentially because it's not always. And then supply is basically selling. But the market doesn't always work that way. You have margin calls, which are going to affect what supply and demand is. That's going to shift things. So it can get very complicated, and we're going to break it down into rules of thumb. So David, you basically have a couple of different areas of supply and demand of we call like neutral or tipping point supply and demand, new fuel, which is the stuff that's going to move the market in a particular direction, or conclusionary. So you can have new fuel demand or new fuel supply, or you can have conclusionary like selling or conclusionary buying. And that's what people call exhaustion. And we have a lot of color coding and methods to let you say, oh, this is in real time. We see selling coming in, but that selling is really conclusionary and it's not new fuel. And that's probably one of the great things that we can show you because you go, oh, the move is over. And hopefully it'll become self-evident with this, David. This is my concept. I don't know if any of your parents are out there, but monitor order flow like you monitor your kids. I know where my kids are at all time. They're either right next to me, or they're in the house, or they're outside, or they're with their mother on the way to school, or they're at school, or they're coming back, or they're at a friend's house and I know their parents. Like they're nowhere that I don't know. And order flow, same thing. It's nowhere what I don't know. But how do you really look at all this magnificent amount of data? There's some order flow products out there that are fantastic, but it's just so much data. How do you really monitor it? And the easiest way here is this indicator here, MacDaddy. Just so you know, MacDaddy the easiest explanation, without getting too deep and too crazy and distracting, is going to be that think of order flow as the rate of change of buying and selling on the Globex servers in Chicago. It has a bit of a price component, but think of it really as the rate of change of buying and selling. And what we want to know, if the market's going up, is the rate of change as the market going up accelerating to the buy side? Or is it going up but decelerating to the buy side? What's that rate of change? And from that outlook, that vantage point, that one optic, we can tell a ton, just a ton. So there's a lot of different ways to take this raw order flow data and represent it or represent it. Like if you break down the word represent, it was represent. We want to represent the order flow in a visual way that's easy for the human brain to monitor in real time, to digest in real time, and to be able to react to in real time. Also, concomitantly, that a programmer could grab the output of this data and then say, oh, I want to do some automated stuff with that. So that's what MacDaddy is. And MacDaddy basically is, I plot it as a histogram. You can plot it as a different ways. A histogram is very, very easy. It has a 0 line, green above, red below. We try to keep it simple. The absolute value of MacDaddy theoretically is negative 100 to the downside or positive 100 to the upside. And it's this indicator here. We have a lot of other stuff on the charts, so we're going to look at a less busy chart. Why don't we do that right now? What we have here is the forward E-mini S&P 500 contract, basically the Junes, on a 4-tick range bar chart. And a lot of people ask, like, why do you use a 4-tick range bar chart and not like a minute chart or a 30-second chart or a 100 volume or a tick chart? And it's very important. This is super important. It's because if we are obsessed with order flow and our go-to indicator is, well, what is the rate of change of order flow in the Globex servers in Chicago? We want to immediately be able to marry the rate of change differences with how price changes. So if we know that we just plot each price increment to be 1 point or 4 ticks in S&P, then it's very easy to make the alignment between what happened in order flow and what happened in price. If you use a 1-minute bar, that wonderful granularity that we look for traders degrades, but it's very easy to represent here. So this is really what I would call the money shot. So Bruno asked another great question. Why 4 ticks and not a higher multiple? By and large, I trade with a couple of guys, but basically most people I know that who are on this concept, it's a 4 or a 5 tick on the ES, and the 5 tick is going to give you a little less noise. And think 5 to 4, that's a 25% increase in size over the 4. And I think as a rule of thumb, people who use a 4 tick range bar and are looking at order flow, they may be getting on a market order. Enter on a market because this stuff is going to happen fast once the order flow kicks in. And the people on the 5 tick are looking at longer. They're looking to get maybe a limit order and tuck it in. So what we have here is order flow on the bottom through MacDaddy, 4 tick, and then these lines are just horizontal lines that are drawn from a pivot. If there's a high pivot, draws a line until that price gets breached, then it stops, and then the new pivot draws everything. And it's just a good way to tell support and resistance. So a little bit more about MacDaddy before we get into the setup. So it's very dependable because, as we discussed, it was engineered to dial into quantifying changes in order flow, and that's the basis for all price changes. It's very visually, it's very easy to read. And one thing that's important is every bar provides information. This is super important. Every bar is going to provide a tell. And then what's nice is MacDaddy in one indicator, and this is one of the things I love about it, it provides both an overall view of the market and tick precise entry locations. So we're going to try to get two examples of both just to get like market topology so everybody gets that orientation today of like, here's your overall view of the market. And then, well, what's my exact tick precise location and how do I use MacDaddy to get to that? And that's pretty exciting. MacDaddy, how to. Let's get into some of the setups. We're going to go through 6 setups in this workshop, not all today, but between this week and next week, and possibly a 7th or 8th. And we'll get through everything, but we want to go with the rate that people are comfortable with it without rushing too much. So first is entering a trend. We're going to spend a lot of time on this today. How do you enter a trend? And then basically we have the concept of MacDaddy spike, and we're going to talk about resumption. That's very important. And this is a good place to start out because it's basic and obvious approach. This we're going to show you out of the gate, red light, green light. Very easy place to start to get your head around resumption and order flow in a trend. And then we'll go down into a little additional approach. It's going to provide more entries, and that's straight resumption. But it's basically the word we're going to be using today is resumption. Another setup that's very, very important is trend continuation tells. And that, I think a lot of people on the call know, that's higher highs in price accompanied by higher highs in MacDaddy, or lower lows in price accompanied by lower lows in MacDaddy. Another very important tell from MacDaddy is the inception of a trend. We'll show you blasts of MacDaddy. There's a very specific footprint for when a new or when many new uptrends start and when many new downtrends start. That is quite unique. And if you've been looking at MacDaddy for any time, or if you have it running on your machine, just pull up a 4-tick bar chart, go back 30 days, any time frame from today 30 back or a year ago 30 back, and then look for any big runs, and quite a handful of them, you're going to see a footprint in MacDaddy right at the get-go that you go, oh, this puppy's going to go for a long time. This is not a 2 or 3 point trade. This is a 10, 15, 20 point trade. And that's really a cool thing to know. Very easy. I don't think we'll get to that today, but we'll definitely get through this next week. And then there is, boom, some more. Breach with force. This is what we want to spend some other time today on. So if we get through resumption, we'll go through breach with force. So that's basically you have a known level. We'll talk very quickly about levels. And then how does price breach that level with substantive MacDaddy? That visually is very easy to see, but you got to see like 3 or 4 examples of what, how are we defining the minimum level and what does that MacDaddy at that level look like? You'll see that a couple times, you'll get it very quickly. So if we could get to today the resumption and then the breach with force, I would think that's magnificent. We have a couple of tells in MacDaddy where you're going to see exhaustion, and that's either in a spike or an exponential rate of change in MacDaddy. Again, very easy to visualize. And then bonus time if we have retail versus institutional, which is like a last minute kind of go-to. It's not a bread and butter thing, but retail versus institutional is like a last minute check that you're going to want to do basically on all entries, or I do at least on all entries. When we'll talk about resumption. This is a key concept. This is such a key concept. Resumption of order flow in the direction of the trend. So basically you have a setup. Let's talk about from a high level what a setup is. We're going to go through the logic of what happens in order flow, and then we'll go to the chart and we'll look at it and we'll see if it plays out or not. So one, you have a trend. I think that there's a couple of different ways to define a trend. I'm sure there's some software out there. I think that the classic technical analysis from the Market Technicians Association, whatever it is, it's a series of higher highs accompanied by a series of higher lows, or downtrend is a series of lower highs accompanied by a series of lower lows. So trends, we all kind of know what they look like. We won't get too bogged down in there, but we're going to look for resumption of order flow in there. So if you see a trend, the next thing to do is look for contiguous MacDaddy in the direction of a trend. So what is contiguous MacDaddy in the direction of a trend? Let's find a trend. Here's a trend, or here's a trend, here's a trend. Let's just do one. Here's a trend, right? And then here's contiguous MacDaddy. 1 bar is green, 2 bars green, 3 bars are green, 4 bars are green, 5 bars are green, 6. That's contiguous. That's what I mean, back to back. Then we'll look back for the pullback. Well, people say, where's my pullback into the trend? Quick pullback in MacDaddy, or actually in price, I should say, price and MacDaddy, in the opposite direction of a trend. People want to tuck into the trend. Where do I tuck it in? That's what you do. You tuck it in. It's pulling back. Now the question is, pulled back, how far is it going to pull back? And then when am I getting in? And that's where MacDaddy comes into play. This is exactly where we're going to spend some time. MacDaddy is going to come into play, and your entry is going to come into play when MacDaddy resumes back in the direction of the contiguous MacDaddy, the pullback, then resumption. And why does this work so well? It works pretty well because MacDaddy is going to tell you that the counter trend order flow has ceased. And it's going to give you an empirical number on that. It's not going to be nebulous. It's going to be empirical. So that's good to know. Gosh, there's a trend, there's a counter trend, and now the counter trend order flow has ceased. So that's good. And then the order flow in the direction of the trend returns to dominance, right? So why is that so important? Because basically the wind is at your back at that point. That's where you're tucked into the trend, and where your first target is, whatever your recent high, low, like if you're in an uptrend and you had a pullback, the chip shot is back to the recent high. That should be pretty straightforward and pretty easy. So that's what we'll talk about. Monitoring order flow shift on the Globex servers in Chicago is a very good place to be paying attention to, and MacDaddy can substantiate that. So one is a trend. Obviously, this is a trend, right? This is dump city. So we look for then contiguous MacDaddy in the direction of the trend. So if it's a downtrend, we're looking for selling. That will be red below the 0 line here. Contiguous. 1, 2, 3, 4, 5, all these contiguous bars. Then you had some green and then this. And let's keep it pretty simple. We're going to look for quick pullback in MacDaddy and price in the opposite direction of the trend. Price went up, really quick pullback. This is as shallow a pullback as you're going to see, but we'll use it for this example. We had MacDaddy pullback, and now let's go back to the crosshair, and we're going to look at very specific. This is where we go to tick precise. -20, -20, -20, price is going down. We're at 20.8050. Price is going down, 20.79 1/4. Price goes up, 29.7 1/4 low, 1 tick bar high. Price goes up to 2080.50. That's 6 ticks, not much of a move in the S&P. Then this bar, range bar, closes, and this is where you'll see the beauty of range bars. Let's make it big for everybody. The close of this bar, 29.70.5, on a range bar is the open of the next bar. These bars can't go to 5 ticks, so once this bar opens here, we know it can't close above here. In theory, the moment this bar opens at 2079.29, 79.25, the highest it can ever go, since it's a 4-tick range bar chart, is 80.25, 4 ticks. If it did close up here at 4 ticks and it would start a new bar up here. Close of this bar is the open of this bar. Close of this bar is the open of this bar. So now what's happening in Chicago? The rate of change is, we know they're selling, and the rate of change is just minorly getting lower. Like, it's hard to see the difference between whatever this is, negative 22.5 and negative, depending on where my mouse is, negative 22, whatever it is, but they're essentially selling hard down here. Now it goes here, and I think let's just pull up this so people can see what the exact numbers are. My eyes are not so good. MacDaddy here goes to 7.08 on this bar. Price goes up, ticks up to 28.25. Price ticks up to 2080.50. If you have like a true data bars or market delta or something in there, you'll see that what the fills were. Not a lot of fills here. That's very interesting to me. Price comes down, moves down. Now, MacDaddy is going to fluctuate in real time intra-bar. This number is going to fluctuate. Be leery of depending on that. Wait for it, for this bar to close. Once this bar closes, this bar to close. Once this bar closes, and then this bar opens, this number is locked in place. That's your tell. What happened here? MacDaddy is now 0.523. Little green, my first example I would have liked to show you red, but regardless, selling, selling, selling into the trend, pull back, price and MacDaddy resume into the trend materially. So what happened on the Globex server in Chicago right there? Let's talk about that, because this is probably the most important thing. The rate of change is increasing to the buy side dramatically, and then dropped from the buy side. They stopped buying in there. That's your tuck right there. They may be buying a little bit. The rate of change, I mean, at this point, like, is it 0.5? Is it 0? Whatever it is, it's such a huge drop back in the direction of the trend. You know that the transaction matching engine, Globex specifically, has reverted back to selling. It's on its way back. That's why we call it resumption, because it's back in the resumption of the trend. And this is probably the most important concept we'll go over today. Let's talk about the entry. The entry, if anybody knows me, I'm a market order guy, because I'm going to get in late. I'm going to wait for the order flow to tell me, which would be somewhere around here on market order. Probably likely filling, knowing the S&P, even in a pretty fast market. A market order is going to fill at 79.25. If you put a limit order, you're like, oh, I want to get in at 79.50. Like, you don't know if you're going to fill or not. Sometimes you're going to fill, sometimes you're not. In this instance, I highly doubt that you would have filled at 79.50. So the market order is so fast in this day and age, and the order book in the S&P is so thick, it's very different than throwing a market order into gold or into crude, that you can, at least I'm comfortable throwing market orders into the S&P, even in a fast market. The one time I may not throw a market order into a fast market would be like at half a second after the economic announcement. So 8:30 a.m. Eastern, and 50 milliseconds or 400 milliseconds, be careful about throwing a market order in at that point. But even in a fast moving market here, I'm comfortable throwing in a market order. So let's just go for some basics first. Here's a great example. I want to put a number out there. See this high here? Here's the trivia question. We had a trivia question up on the boards. We'll get to that one. Here's a better trivia question. What was the weekly VWAP today? I think the weekly VWAP was 87.50, 87 and a half. So I'm going to put something here that says 87 and a half. So the reason VWAP's important, I think it's because so many of these institutional algorithms are written to VWAP. It's nothing more than that. All these institutions, you know, they raise their, oh, we use VWAP and blah, blah, blah. So David Martin nailed it. Yeah, thank you, David. Super important number. If you know where the VWAP is, you know where you're going to get institutional stuff coming into play here. So I know quite a few people who are saying, oh, you know, they're waiting at that 87. So we had the lift, and let's just go through some bar by bar stuff because this to me is fascinating. We get the 87.50 number, market goes up. What's happening to MacDaddy up here? Oh no, it's decrementing. Price is going higher. MacDaddy's decrementing. That's not necessarily a sell signal, but obviously the rate of change is decelerating in Chicago. Price is going up. So if price is a change, changes in price are a function of changes in order flow, that price is being levitated. This is a tell right here, super important. And this is what we're going to get into next week, just as another thing. But let's see. We have a high here. Let's around, what is the number here? 88 and a quarter. Price and MacDaddy are concomitant. Low put in. Price goes up. And now we have a down bar, my range bar. Contiguous bars. I know earlier we said here a trend should be in place, but often at the beginning of trend, you can play the same game. And I'll show you how. Green, 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 red, 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 red. Bought up. Went down. The close of this bar is the open of this bar. That's 86.75. So if you were looking at like, oh, I'm going to go to VWAP and I'm going to see what happens up there, by the close of this bar, which is the open of this bar or market order, you've already got resumption in order flow to the sell side. Now, what's interesting is you can get in early or late. Let's say you're like, that's pretty aggressive. I want to get in early. I need a tight stop up there. The question that I ask myself when I'm jumping the gun up here and I'm like, I want to sell, I want to get in early, is not only does price go up, but does price go down? Do I see follow through? And does MacDaddy follow through? So now already over here, price is only at 85.75 to 88.25. What is that, 2.5 points? It's only gone down 10 ticks, but you're already around this 10 tick area. And you've already got a tremendous amount of order flow information that some selling is going on. It may not be the end of it, but if you're in sell position and you're in sell mode, you can be comfortable now because, well, other people are selling too. And not only other people, but the entire rate of change on the Globex servers in Chicago for a market as massive as the S&P 500 with all these magnificent algo quant shops that are more than half of the participation, they're selling too up here. So you're in good company, and that's what this is telling you. Let's go around and see if we can see contiguous and spike. Contiguous, 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 spike. Close of this bar is the open of this bar. Does levitate a bit, but goes down. Selling, selling, selling. Up and then down. I would call this the other part here. The basic and obvious approach is where it's all red with green to red. That's basic and obvious. That's like red light, green light if you want to stick with red light, green light. If you want an additional approach, which is going to provide more entries, it's basically straight resumption. And this is a good example here. Selling, 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 price goes up, and kind of like the first one. By here, we have evidence that the market has resumed to the sell side. Price goes up, order flow goes down. Oh, how interesting is that? Get out of here. Price goes up, one more, so the resumption occurred, let's say, at 28.25. We had a lift in price to 86.75. Bar closed down, back here to the 85.50 zone. MacDaddy's still to the sell side, and this is already the closed bar up here. So this whole zone, you're like, oh, is it going to go up or not? You can say, well, what's MacDaddy doing? The rate of change of order flow on the Globex servers is still to the sell side. So that's the important tell, and that's why we said earlier, every bar in MacDaddy tells a story. And that's where we're saying, oh, everybody, if you went in here and you sold and MacDaddy's buying, tighten it up. You better be paying attention. But as long as they're selling, you should be good. And that is pretty consistent from my observations and my trading. That there is basically something that should never change either, because we tie it back to supply and demand, order flow, changes in price. We're going to do through a couple of examples, and then we're going to go through another setup. Okay, so I don't want to overly and let's cheat a little. So I'll cheat here just to cherry pick some stuff. Did we look at these before? Oh, here you go, downtrend. But if you want, just do this exercise at home. You don't have to cherry pick, just see, well, how often does that work and how often does it not work, right? Market made a high, they dumped it a little bit of a higher high, a little bit of a higher high, and then price goes sideways. Who the heck knows what's going on here? A little selling, price is going sideways, green to red. This ticked high of here, here, here is contiguous with these things. This is like that known level that we're looking at. What's going on in here? Selling, the most minute green, red. You want to be a seller here? Who knows? But if you want to, you're probably in decent company. You're probably not in a danger zone. Price goes down, price goes down. They're selling, 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 selling. Shoot, I didn't get in that perfect thing. The train has pulled out of the station. I'm late to the wedding. How do I get in, right? That's the question. And this is where resumption becomes so amazing. Like, this is why spikes and resumption are earning, because you're not always there on time at 1 o'clock in the morning or whatever, or you're, who knows, but you're late to the wedding. So I'm late to the wedding. We want to see price and order flow tick up. It does so here. Make it a little wider so you can see. Bar closes at 27.5. Opens at 27.25. Close here, and then continues down. Same thing. 3:15 in the morning, you have this extended spike down to negative 54. That's pretty high. I'm going to go like this. Let's look. If you look we talked briefly about it, of like what is exhaustion. When you have an extreme little number like that, the overnight's going to give you a better tell. You may have some exhaustion. So you've got like a lot of selling stuff, but that one little spike, super extreme, is an exhaustion tell. And we'll spend more time on that next week. But regardless, market's going sideways. We're going to clip here sideways. And MacDaddy, green, 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 red, green. We do have technically resumption. Whether you know that in real time, who knows? We do have the old engulfing bar, which is what you'd like to see, and then the follow through. But green, 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 red, resumption here. Looks like a fairly good resumption bar at this point. So if on the close of this bar, you get in here, the one question that I'm always asking myself is, hey, I may be early, the train may be pulling out of the station, it may not, doesn't really make a difference. You made a judgment call to enter. You're in here at 2070. And market order. The only thing that matters, and this is the super thing about order flow, this is why order flow is so wonderful. Let's say you're like, oh, the market's going to go up, I'm going to take 2 points. The market's going to go up, I'm going to take 4 ticks. The market's going to go up, I want to take 100 points. Whatever it is, once you enter, the only thing you really care about is, does more order flow come in behind me? I've committed. I've pulled the trigger. I'm in a market. All I care is that order flow comes in behind me. So if the bar goes up and order flow goes up, great. And the bar goes up and order flow goes up, great. And the bar goes up and order flow goes up, great. And I'm in the trade. And what we want to know is that, oh, the bar stopped going up and order flow went down. I'm either out or I'm out at my target. How are your stops and target base? Generally, they're 4 to 8 ticks. But sometimes I know, right after I got in, that there is a magnificent amount of order flow. And depending on the market structure, this puppy's going to go up, up, up. So let's look a little bit more at just a couple of examples, and then we're going to get onto one more setup, right? This is a good example because you have such an extreme push here, and then here you're back to zero. It's probably resuming in the direction of the trend, downtrend, new trend, but great. Up, down, resumption. Order flow is resumed on the Globex servers in Chicago. I want to get in, okay. Degrading, but still selling, dump. back and dump, and back and dump, and back and dump, and then dunk, dunk, pull back a little bit, not material, dunk, 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 resumption. There's your resumption. So Mark's asking, great, sure. Let's look at the 2057, the low today. So here's the low, Mark. Dunk, dunk, dunk. Higher, lower low, higher low, and then this steady. This is an important tell. So I apologize. I want to spend more time on spikes, but we're going to jump over to a little bit more like breaches. Let's start talking about this. And if we have to go to a third week on this, I'm happy to do it because MacDaddy's got so much good stuff in it. And I want everybody to be fluent in it because it's pretty easy. So we were going to talk about breaches with force, number 4 here. A known level and a price breaches that level with substantive MacDaddy. This is something that I trade a lot. So I know it's number 4, but like I'm very fluent in this because it's a real setup. This is wonderful. Let's talk about known levels. There's different ways to determine levels. Some are dynamic, some are static. I'm a little old school. I look at where price turned. And the reason I look at where price turned is because you have empirical evidence. It's, you know, that supply and demand met there and then there was a change in direction. So for a supply and demand shop, price pivots give you hard information of where, you know, there was a turn in supply and demand. Super duper. And then also it's easy. You know, there's no gray or interpretation. You know, the basic ones, you can look at a bunch of little pivots, or you could just say, hey, I'm trading the overnight high and low and I'm trading the prior day high and low. Whatever it is, super duper easy to put out there. And then order flow at those known locations is very consistent. What we want to see is a known level and then price to breach that level with substantive MacDaddy. Oh, I'm getting reminded, if you don't have Sceeto and you want to do this, you're very welcome to get a free trial. It's a very cool product. I use it. I love it. I wrote it. So it's very oriented to my style of trading, but it's a lot of people seem to gravitate to it. So please get it. We have a promo code available, HFT5MAN. If you need help getting set up to Sceeto, just open up a help desk ticket. We can help you get set up so you don't have to pull your hair out. Let's find some known levels that everybody's familiar with. Go back to the number we talked earlier, 28.70.50. You've got this high, and then I'm going to bring over, to make it easier, let's look at a 14-tick range bar chart. And I'm going to show you how I cheat. I love cheating. And when I say cheating, I mean we have like advanced information or better information. This is the easiest way to cheat. A 14-tick range bar chart gives you a very good market map. This indicator here that shows the pivots and like LL is lower low, lower high, is I think a price action swing, and it's freely available out there. So it's great at putting the numbers, like I can't read the numbers, so it puts the numbers on, and then I draw these horizontal lines. And it's a very quick market map. You can see just in this one chart that's kind of easy to read, we have, I don't know if you can see, but maybe 1, 2, 3, 4 plus days. So in terms of a market map, you can really have your bearings very, very quickly, and it's important to have your bearings in the market. Let's look at the fake out from yesterday. This was magnificent. So we're going to look at this at tuned timescales, and this is really magnificent. So apologies, we're going to run a little late just getting through this one example, but this is a magnificent example of what happened and like how MacDaddy is so critical. A lot of people had the 92 number in their head, right? 92.25. That was, I think it was the like overnight high. You had the sell down, then the pop up. Everybody had the 21.850, and then we had the 21.825 in the overnights. That was one tick below, right? Here's a known range. What's going to happen up here? So this is kind of the pre-market. I don't know if you can see the timestamp. It's 6:30 Eastern. Most traders, at least on the East Coast, 6:30, 7:30, they're kind of at their machines. They're looking. They know what's going on. Then you had a pullback in the pre-market 86, and then it tightened up, right? So I know in my morning, my trading plan was, I'm like, oh, a breach of 92.50. And when I say breach, I just mean price going through 92.50 with force, which means a ton of MacDaddy, green MacDaddy, I'm going to be a buyer, right? That's all there is to it. And why? Because price went through a known resistance and there was a bunch of order flow to corroborate it. So all through the pre-market, we were watching, when's it going to hit 92.50? When's it going to hit 92.50, right? On the 14-tick chart, this is interesting. We have MacDaddy degrading. Let's look at what it is on the 4-tick chart, which is what we trade on, or I trade on. And let's find that. This was unbelievable. This was fantastic in terms of order flow, right? So pre-market, I'm going to put a vertical line. Where are we looking? Like around 630 or so, right? What's going on? They're selling it. They're bringing it up. They're selling it. Price is boxed in, getting tighter, right? Everybody's saying, what are they going to do? What are they going to do, right? 830 goes back up, and then from 830 to 924, like 54 minutes, they keep it boxed in a range from 28,750 to 2090 and a quarter. What was that? 8750. That would be 2.75 points. They breached this local resistance with pretty good MacDaddy, right? Okay, it looks like they're going to gun it. Don't know. Pre-market coming into the open. Next bar is down. De minimis amount of MacDaddy. Not worried about selling. That's good. If MacDaddy was down here, perfectly acceptable pullback. MacDaddy increments a little bit. Price resumes. 9:30 the open, 32 seconds. They're buying, right? Another bar up. MacDaddy up. Boom. Now I'm at my 92 number. We're breaching 92, but not 92.50. But upper MacDaddy. I know I'm bullish here. I'm like, oh, good. They're gonna pop it and gun it, right? And you're gonna have a pop. You're gonna have trading room in here, right? Yay! They breached MacDaddy. They breached it. Perfect. I know a lot of people. I think I longed market. I was at 93, 93 and a quarter. No problem. Took it. It's gonna go up, right? What's the next bar? Steady MacDaddy. Down and up. A hammer. This is a hammer. This is super important. I trade these all the time. Or I don't trade these. This is a pre-indication. Why is a hammer important? Because it tees up an engulfing bar. An engulfing bar is very bearish. So even though we don't have the engulfing bar, we get a tell saying, huh, I have a potential engulfing bar on the horizon. All right. Price went up, an engulfing bar, boom. No big deal. I mean, this is a 4-tick pullback, not a danger zone. Don't really know if it's turned around yet. Market went down, 92 and a quarter. If 92.50 was my breakout number, certainly entirely reasonable to pull back to here. Some people had orders waiting at 92.50, 92 and a quarter. I know some traders were looking for the pullback. Me, I'm the market guy in, oh, let me get a market. I know Billy and some of the other guys are tucking in on a limit order on the pullback, right? Perfectly reasonable. MacDaddy is decrementing. Perfectly reasonable, 932, 933, down bar, but MacDaddy's slowing down. Still sideways, nothing. We take a little lower. Spike bar up, down bar. Wow, that was a lot of selling. But my price point is 92. Still not so bad. Now we got another bar down. This and this shouldn't happen. So in real time, you can make a couple of assumptions. Certainly by the end of this bar, the beginning of this bar, 90.75, around here, anywhere in here, you're like, wow, if they breached it with force, like we said earlier, and this is the beauty of it, once you've committed to the trade, what becomes important, and the primary question is there more agreeing order flow coming in behind me? Absolutely not. They're not buying in before you. We tapped to 90, we tapped to 91.75. If this thing was breached with force, that 90, 92, 92 and a quarter fills were there, but people really shouldn't be filling out the wazoo after that if they meant to buy it. All bets are off. That's how we know it. All bets are off. Price is going down. How do I get into my trend? Think either hopefully you get out, you're flat, and now you may have reversed. If you're the greatest trader in the world, you're like, oh, I reversed and now I'm short. Not likely. Maybe you got stopped out, maybe you tightened up, maybe whatever. But now they're selling these lower lows. It's right at the open, 935, and then resumption, and you're good to go. So order flow is the tell here. Entering a trend, we talked about that. Trend continuation tells we'll talk about next week. The inception of the trend, the blast of MacDaddy we're going to talk about. Super duper important, very obvious. We'll try to get some examples ready. Also, we'll do some more on breach with force. We'll go through a bunch of tells. We'll go through the exhaustion tells, which is really the exhaustion spike and exponential. Once you see a couple of those, when they happen in the right place at the right time, you'll be very comfortable saying, this puppy's done. Bonus, we'll get into retail versus institutional, which is really cool. Pivots in VWAP. Rumi Guru asked a great question, saying, so pivots in VWAP give you a heads up for the change of direction. Pivots, VWAP, and a degradation in MacDaddy. So yeah, either to the long side or the upside. Absolutely. Pivots, VWAP, and MacDaddy will tell you a substantial swing trade type change in direction. So yeah. If you don't have Sceeto and you want to look with the charts next week, get a free trial. We'll help you get set up. We're going to be spending a lot of time on MacDaddy. It's the go-to indicator. And then what's really cool is once you get comfortable with MacDaddy and price, we'll layer on some other stuff like the order flow monitor and the tape meter, and you'll see that, oh, if you have a read on price and MacDaddy through this, you'll know in advance, I should see this. I should see this happening. This is what I should see next. Or if I see this, I'm good to go. And that's where we're going to sprinkle in additional order flow information on the price chart itself up here. And that's, magnificent.
Sceeto's advanced algorithmic order flow data is now available within TradeStation, NinjaTrader, Multicharts, and Sierra Chart. For more information, please visit www.sceeto.com. This is Cuerva from Sceeto. Happy trading.